Today on Careers, we are going to meet two people who are very successful individually and also together as a team. They are also married. They are both mortgage brokers. Stay tuned for Careers. My name is Peter Wolfl, and welcome to Careers. My first guest today is Rena Malkah. She went from selling health club memberships to selling mortgages. And in 1975, she founded CYR Financing Limited, which now places more than $150 million in mortgages each year. She is also the first female president of the Ontario Mortgage Brokers Association. She is the publisher of a real estate newsletter and a financial newspaper called Creative Financing Forum. And she is the co-founder of a daycare center. Welcome to the show, Rena.
Thank you very much, Peter.
That sure is a lot of accomplishments.
Yes.
Rena is joined by her husband and business partner, Keith Waters. In addition to having been a top real estate salesman and a district manager for a data processing firm, Keith has experience in teaching and in setting up motivational seminars. Welcome, Keith, to the show.
Nice to be here. Thank you for inviting us.
Now, the show is about being a mortgage broker and being a successful one at that. What is a mortgage broker? Maybe we can start on that note.
Mortgage broker is someone who's taken a course that's administered by the Ontario Mortgage Brokers Association and has received a license from the Ministry of Financial Institutions. And basically what a mortgage broker does is that they're a middleman between a borrower and a lender. It's the mortgage broker's job to know what all the lending institutions, as well as all their private lending sources, have to offer for residential or commercial mortgages, first, seconds, closed, open, 1 to 5 year term, so that when a borrower comes with a specific type of mortgage, we will match them with the most appropriate lender in the quickest amount of time at the best possible rate. And the reason that people come to mortgage brokers, there are a number of different areas that mortgage brokers handle for the borrowers are, first of all, in qualified residential mortgages. Quite often we can beat the banks by as much as 1/4 or 0.5%, and perhaps
that can mean a lot of money in the long run.
That's right. And we might not even charge a fee because for the qualified residential mortgages, we are funded through mortgage-backed securities that are available only to brokers through the stock market, and we are paid by the lender so that we can not charge the borrower anything. The other cases are where people do not qualify through a bank. They've had some credit problems in the past, or they can't prove their income. Maybe they're in a cash-type business, or they do have a good job with good income, but not just quite enough to meet with the guidelines and ratios that the banks calculate. And those type of people, we can give them mortgages at maybe 1/4 or 0.5% higher rate. We can also do second mortgages for up to 85 or 90% of the property value. This is really important because banks and trust companies are restricted to lend only up to 75% of a property value, and if you want to borrow a higher loan ratio to value, the loan has to be insured by Canada Mortgage and Housing Corporation or by Mortgage Insurance Company of Canada, and that fee is very expensive. It's 2.5%. So on a $100,000 mortgage, you'd pay $2,500.
You have to have 25% normally, right?
Normally, but using these type of funds, where we give you a first mortgage that's the normal 75% first mortgage and a private second mortgage up to 85 or 90%, then the borrower or purchaser only has to put 10% down, and these types of money are only available through mortgage brokers.
I see. But so do you actually do lend money then?
No, actually, we're the middleman.
You just match those people up. You know, you're sort of like a dating service of lenders to borrowers.
That's right, and we charge a fee for doing that usually. And also, we do types of financing that banks don't want to do. Maybe they don't want to do land or go out of town or do construction for small construction projects, that type of thing.
Oh, that's interesting. Now, how did both of you ever end up getting into this line of work in the first place? Maybe starting with Keith.
Well, I started my career out of Ottawa, right out of high school at age 16, as a mortgage clerk at Central Mortgage. So I've been in the real estate business and the mortgage business all my life. And I was working with a trust company for a while and decided to work on my own. And in the early 70s, I became a real estate agent. And with my financing background from the trust company, it seemed a natural spin-off back in '74 to go in the mortgage business. So I had the real estate and the financing background. But it's a struggle, the coming up the long way and the hard way in the real estate and the trust business.
Did you find that having already had some real estate sales experience was helpful in this particular career?
Well, it helps from the standpoint of understanding, if you're dealing with real estate people, their sense of urgency of what they require. Realtors use mortgage brokers predominantly because we can give their client service right away. We can help them remove a condition right away by committing right away on a mortgage, because we'll know we can fund that. Whereas banks or trust companies don't have that ability. So yeah, it's helped from the standpoint of understanding where a realtor is coming from, where he needs something right away when he calls us.
Would most of your business be coming from realtors?
Ironically not our business. We have a different type of market. We do a lot of business with realtors, but primarily ours is referrals and banks and trust companies.
Okay.
Bankers who can't help their clients, give them an alternative and give us a call.
We'll talk about that a little bit more later. But before, how about Rena? How did you get into being a mortgage broker?
Actually, I was going to be a real estate agent as well.
Were you?
And I went to work for a very small real estate brokerage firm where the broker used his license for his own investment purposes and didn't actually list or sell real estate. And he had another fellow working in the office who did mortgage brokering, and I was hired to be the real estate department. And shortly after I started, a speculation tax came into being, which dampened the market and everybody stopped buying. So the real estate broker said, would you like to do mortgages instead? I decided not to have a real estate department, and I was only 20 years old at the time, and I saw the fellow in the office next to me getting checks every week between $500 to $1,000. So I said, yes, of course I'm interested.
That sounds good. Do we still have that speculation tax?
No.
That's been taken off.
That's right. They were thinking about bringing it back in.
Yeah, because that really accounts for a lot of the problems, I guess, in the high prices we have to pay nowadays for buying houses for the first time.
It does, but not as much as it did back in the 73, 74 era.
Is that right? Okay. Well, you're both very successful in what you do. How long have you been in operation?
Since 1975.
Okay. And in that time, you've actually placed more than, you place now $150 million in mortgages a year?
Yes.
Seems like a lot of money. What accounts for that success?
Well, for one thing, we've been in the business for a long time, so we've established a reputation, and we have some unusual marketing techniques so that we deal directly with the borrowers, mainly real estate investors. The clients that we deal with are not, the majority of them are not homeowners who come to us once every 3 or 5 years. The real estate investors come to us maybe a dozen or 20 times a year. They're buying properties on a continual basis, and they're referring other investors to us all the time. So I think the reason for our success is really our good reputation and referral business.
And most of your customers then are not real estate investors. You were going to be talking about that. Maybe can you elaborate on that?
No, I meant
now?
real estate agents per se. Most of our customers are not real estate agents, they're real estate investors.
Oh, I see.
Where we'll, like a lot of mortgage brokers, will work directly just with real estate agents. That's where they get all their work from.
So these would be people who are buying real estate with really no intention at all of even living there themselves. They just want to rent it out and try and hope for some good appreciation on their value, on the property.
So we believe real estate is the best investment that you can make on a long-term basis. We don't preach flipping or getting rich quick. If you can find a property where the rental income is stable and is sufficient to carry all the operating expenses of the property and the mortgages, you can hold on to it for 5 or 8 or 10 years until the next boom comes. And the property can be double in value. So for example, if you bought a $200,000 property with only $20,000 down, and 5 years from now you sell it for $400,000, you've made $200,000 on your $20,000. That's 1,000% in 5 years, or a 200% return a year. It's a good return on your money.
You sure don't get that in the bank.
That's right.
Not ever.
Yeah, well, that's very impressive. Now, when these people come to you, what do they have to do then? Do they just say, I'm in the market, I want to buy a house, I'd like to invest?
Well, most people will.
Where can I get the best deal?
Well, that's the job of a mortgage broker. Our job is to
Right.
give them the best deal. And what the people have to understand is we don't make any money unless we give them money. So
Right.
unlike going to a bank or a trust company so if they don't get it, they still get their paycheck. So the onus is on us to give them the best deal possible because we do live off referral business. People will come to us when they, at the time, hopefully they should call us before they type their offer up so they know what their situation is, how much money we can get for them. In many cases, we've given people 100% financing for their purchase. But we've done that either with other real estate as collateral, or we've done it by giving them an equity loan. But it really depends on the individual. They've got to be qualified people who, a lot of people who earn good money, but unfortunately don't have the ability to save it. If they're smart, they should buy real estate as soon as possible and get in the game as soon as possible, even with the high prices today.
Not that long ago, I heard that there were these people preaching courses such as buy real estate with no money down.
That's correct.
Can people do that?
Yes, they can. But it's not no money down. It doesn't mean the vendor gets no money or the agent doesn't get his commission or you take no money. It's no money out of your pocket. And it could be no money out of your pocket by way of your father putting up the down payment, an investor putting up the down payment for you and taking part of the equity. It could also be you borrow the money at the bank and get a bank line. The banks are all lending all sorts of money now to people who have good
Line of
jobs.
credit.
Line of credits. So yeah, nothing down from the standpoint of nothing from your pocket is what they're talking about.
100% other people's money.
That's it. OPM. Other people's money.
Is that the way to do it, do you think?
That's the way the Reichmans do it. Seriously. That's the way the Compo does it. They use other people's money. And this is just a small man's way of doing it,
Yeah.
which is an exciting way of looking at real estate. And it gets rid of the old myth that you need 25% down, because you don't.
Are you able to offer people advice, further advice
Yes.
on how to do that?
Yeah.
Okay. I noticed that you have a little pamphlet here. Maybe can you tell us a little bit more about that?
Yeah, Rena, won't you?
This is a newspaper that we publish 4 times a year called the Creative Financing Forum, and it's a newspaper for real estate investors on topics like rent controls, property management, negotiating techniques, planning your investment strategy, tax tips. And anybody who wants to be in the real estate game should get an education. We don't recommend somebody going into it who doesn't know what they're doing. This is one way that they can learn more about it. And we also offer conferences once a month to real estate investors. We have about 400 people who come every month. It's the third Tuesday of each month at the Triumph Hotel from 7 to 10 p.m.,
Oh, yeah.
$10 at the door. And we have speakers who are authors or lawyers, or top experts in all these different fields that people should know about if they're going to invest in real estate.
Oh, I see. So what would be some of the subtopics?
Well, for example, recently we've had the president of the Fair Rental Policy Organization. That's a group of large developers and landlords who are lobbying against rent controls. We always do a segment on creative financing, so we give some mortgage tips. We're having a lawyer speaking on speculation tax. We have an appraiser speaking on if speculation still exists. We have another lawyer speaking on joint ventures and limited partnerships, what you should look for in those. Around tax time, we usually discuss things like investing in self-administered RRSP mortgages, income splitting, different types of tax tips at tax time. Property management, what type of insurance you should have. Like, you should always remember to get rental insurance if it's a rental property, because if the building should burn down, it's nice to have rental income to keep paying the mortgage until it's rebuilt. Things like that.
That's very interesting. Rena and Keith, we have to take a short break right now. When we return, we'll return with Rena, Malkah, and Keith Waters, mortgage brokers. Stay tuned for Careers. We're back with Careers, and today's topic is mortgage brokers. Now, Rena, do you believe that somebody could be a mortgage investor, a real estate investor on a full-time basis to actually make that a career?
Yes, they can eventually. Usually most of the people that we deal with start off doing it part-time in the evenings and the weekends, and eventually some of them get so involved that they have 20 or 30 properties and it becomes a full-time job. They have enough positive cash flow that they can afford to leave their job.
But it must be quite a risk, isn't it?
Well, if you have properties that have a rental income, especially residential, with such a low vacancy rate, pretty well anywhere in Ontario, there's not much of a risk.
Mm-hmm. Keith, are condominiums a good investment?
Yes, condominiums and all real estate is a good investment, but condominiums, a lot of our investors prefer them because they're easy to manage. You usually have one tenant. However, in the Toronto area, the challenge is getting enough rent to cover the condominium with the high cost of real estate.
Mm-hmm.
So, but years has held up. The condominiums have been shown a good return, especially in the downtown Toronto area. The concern with condominiums is management. You want to make sure that the management is okay, because if you have bad management, it spoils the whole condominium project, gets a bad name. Like any other piece of real estate, it doesn't get looked after properly, it depreciates in value, and you have chaos. Mm-hmm. So management is the key when you're buying a condominium. Make sure you check out the management and ask for the financial statements. It shows the operation of the condominium.
Do you think it's possible to have some real estate, whether it's a condominium or a detached home for that matter, that actually carries itself from the rent?
In Toronto, it's possible if you put a large down payment. With the average house saying in a 200 range, and if you can rent it out maybe a 3-bedroom bungalow, you can rent out maybe for $1,500, $1,600. That means you got to put about $50,000, $60,000 cash into it. Where we're finding a lot of our investors in today's market, they're going in the outlying areas: Cambridge, Kitchener, Oshawa, Ajax, up north, Walkerton, Owen Sound, all small communities, where it's still making sense. But it is a challenge in Toronto unless you put a lot of money down.
Have rent controls put a damper on your business at all?
They haven't put a damper on our business per se, but they have put a damper on the real estate market, in that both tenants and homeowners are suffering because of rent controls. Builders are not building apartment buildings anymore because they're not feasible economically. Mm-hmm. Therefore, people who are looking for apartments can't find them. They're almost forced into buying homes, thereby increasing the demand and driving house prices up. Mm-hmm. Then in the apartment area, there are a lot of people who are professionals who are earning $50,000, $60,000 a year or more, who are getting apartments for $300, $400, $500 a month, and they can well afford to buy a home, but I can't blame them for not leaving the low rent apartments. And then the people who really, the low-income people who really need those units, do not have them available. So unfortunately, rent controls are not really helping the people they were originally designed to serve. I think that if the government wants to help tenants who need help, that the individuals should be subsidized, and either the government should pay their full rent directly to the landlord, or half the rent. Whatever the tenant can afford, the tenant should pay their portion and the government should pay the balance. Right now it's an unfair burden for apartment building owners because they're really subsidizing the tenants.
I see. Okay, what about the rising interest rates? In fact, I heard just in the news lately that they are expected to go up. Mm-hmm. Is that going to be affecting your business?
Well, ironically, in our business as mortgage brokers, whether the rates come up or down, we're always busy, because if there is the push to go up, people want to lock in their mortgages now, so everyone gets off their tush and starts moving and starts locking it in now. But overall, it has an effect on the industry for sure, and some people are backing off. But again, the real estate market in this town is still brisk.
This is probably just a blip in the marketplace, too. The rates may go up another 1/4 or 1/2%, but then they'll probably come down for a number of reasons. First of all, there's an American election, there's a Canadian election. Mm-hmm. All the politicians want to look good before they're elected and after they're elected, to say, hey, we're the good guys. See what the other people did? They couldn't keep rates down. We will. And also in...
is that driving up rates?
No, that's going to bring rates down, back down again. Okay. And another reason why the rates will probably come down is that by the end of February, all the financial institutions have had their big RRSP campaigns, and they're flush with funds, and they have to put the money out. So traditionally, in the early spring, rates always come down.
Okay. Keith, why have housing prices increased so dramatically over the last couple of years? A friend of mine bought a house, I guess it was $135,000 2 years ago, and today it's worth about double that. Why the sudden increase?
Well, there's a number of reasons for that. First of all, there was pent-up buying power back from 1981 when we had our first big peak, and then the market bust all of a sudden. Mm-hmm. So the market sort of sat dormant for 3 or 4 years, and it really didn't start rolling again until late 85, early 86. And it was pent-up buying from the standpoint of supply and demand, basically, that a lot of people always wanted to buy. Pride of ownership and home ownership is one of the key things that people want out of life, to have their own home. And on a world scale, Toronto itself is still a bargain. Mm-hmm. And let's hopefully, it's not going to keep continuing However, what you say is so true about many pieces of real estate. Even our own, we have a building downtown on Parliament Street that 2.5 years ago we moved out of and tried to sell for $240 we were offered, and now we're told it's worth over $600,000. So all we say is, what a country, we're happy we live here, and thank God that we own real estate.
Keith, what can a young couple do nowadays when they want to buy a house for the first time?
Well, first of all, what happens is many get frustrated. Because as you know, with the high cost of house, I believe the average price in Toronto now is something like $230,000. And even if you can scrape up 10%, which is $25,000 per thousand, that means you still got to carry roughly $200,000 in financing, which means you have to make over $75,000, $80,000 to qualify for that. What we're finding is a lot of young couples are getting together. Two young couples together are buying a house as four, and they're joining their incomes to buy. And a lot of people are buying properties that they can convert the basement into rental units or rent out part of the other part of their house on the second level. A lot of them are going to their parents for money, and a lot of them are bringing in other investors. They may get a group together and say, let's buy this house together, we'll live there, and you put up some of the down payment. And that's the way that a lot of them are doing it right now.
I see. Well,
and it's tough. It's not easy, but they're doing it.
Yeah, even to collect the down payment is very difficult.
It's a real challenge. But the sad thing is, if they don't do it now and they wait 5 years, then they'll need $50,000 for a down payment. So if they can, whatever way they can do it.
You don't think there's any chance that house prices will come down again?
Well, history has proven us wrong. I mean, back in '81, I remember we had a house, Rena and I, that we bought in 1979 on Main Street. And we paid, I think, $58,000 for it. It was right by the subway. And in the peak in 1981, 2 years later, we were offered $139,000 for that. Unbelievable. We would have made $90,000, and that was a lot of money, as it is today. But we didn't sell it at that time because we thought the peak was going to go higher. Well, it didn't. The market bottomed out. And in 1984, we sold that same piece of property for $104,000. But however, that same piece of property just sold this year in January 1988 for $289,000. So although it comes down and has its peaks, real estate traditionally has always been a strong return and has always increased in value.
It doesn't really matter if real estate does go down in value. The idea is to buy it as a long-term investment. If you can rent it out to carry the operating expenses on the mortgages, even if the prices do go down, it doesn't matter. It's not costing you anything out of your pocket, and you can keep it for as long as it takes till the next boom comes. 5 or 8 years down the road, there's always going to be a boom. It's a cyclical thing. There's a recession, there's a boom.
Do they tend to repeat after a certain number of years?
Well, I've been around for 3 booms. There was one in 1973-74, one in 1981, and then the last one, which has been the longest one, has been going on for a couple of years.
So does that mean we're going to be coming into a downfall area or a recession?
It's possible. But if the property is rented to carry, it doesn't really matter. You'll wait till the next boom.
Yeah. When do you think that would be?
Sometime between the next 5 to 8 years.
Okay, great. Rena, you also are the co-founder of a daycare center. Is that right?
That's right. Keith and I founded the daycare center ourselves, and the reason we did that was because our own daughter, who was 2.5 at the time, required daycare. And we had a building, as Keith mentioned, on Parliament Street, that was in the right zoning area. We had our mortgage offices there, and we decided to move into a different type of office space. And a friend of ours, who is an ECE teacher and was the supervisor at the Infant Toddler Center at Ryerson, had always wanted to start her own center. So all the pieces fit together, and we started our own school. Actually, we figured out we would have been much better off to send our daughter to Switzerland for an education.
Are you still actively involved in running the school?
Oh, yeah.
How do you manage that? You have 2 children, you're running a daycare center, mortgage brokers. How can you do all that at once?
Well, the important thing is to have good co-workers who are qualified. We have a property manager to manage our properties. We have a coordinator who runs the school. Each of us have an assistant in the mortgage brokering field. We have another assistant who does the newspaper. So it's a lot of delegation, training other people to do your job in delegating and supervising.
Okay. Now, being married, are you finding that helps at all? What do you suggest to other maybe entrepreneurs out there that are also married? Is there some advantage at all of?
First, you need a strong commitment to your marriage to work together.
Really?
It's challenging. like anything, and especially with our harried schedule, ironically, we got to book time with each other sometimes to get to see one another. But my suggestion would be, like anything in any relationship, just make sure you know how to communicate with each other.
Mm-hmm.
And if something's bugging you, make sure you let the other person know. Because if you let it build up, it's no good, especially in a working relationship along with your marriage. You don't want to as hard as we try not to bring our work home, it's pretty hard not to.
Well, especially since you're in the same business.
That's right. Yeah.
But I imagine if somebody is married and his wife is involved in the business, wouldn't he have a little bit more of a sympathetic ear from her, knowing that the long hours that he has to put in, the 60-hour weeks or more, that the typical entrepreneur has to put in?
Yeah, that's, yes, you're to say you certainly do. I think one of the things Rena and I have always agreed about, that the benefit of working for yourself or being an entrepreneur is that you can work 18, 20 hours a day and no one will tell you not to. You know, that's about the only benefit I could see. But, so it is a challenge.
Okay, what are your plans for the future?
Well, our plans for the future are to invest in a lot more real estate. We're trying to buy at least 10 to 15 properties a year and build up enough positive cash flow that we'll have a retirement income to live on and that we can retire fairly young.
Okay, that's all the time we have now. Rena and Keith, thank you very much for joining us on Careers.
Thank you very much, Peter.
Again, I'd like to tell all our viewers that we really value your comments and suggestions. If you have any ideas at all for future guests or for topics, please let me know. And you can write me right here. Peter Wolfl, host, Careers, Graham Cable TV, Channel 10, 35 Scarlett Road, Toronto, Ontario, M6N 4J8. From all of us here at the studio, good luck in your own career.